Hello, everyone. Welcome. Welcome to our live analysis. It was ECB is out of the way, and US GDP actually will be released right now. So very, very important releases for the week. Might be the most important for January, if you ask me. Since, especially in the US, we're gonna figure out, or at least get a confirmation whether we have seen US economy avoiding a recession in 2023. So, there were a lot of reports, a lot of comments that saying that, oh, we are going to have a recession. No, US avoided the recession, or it's just a slowdown in the growth, and so on and so forth. So today's reading is going to actually give us a reassurance what actually happened. So the data are out just 3 minutes ago. Let me share as well my calendar with you. So, until I share the calendar and everything we need, just to remind you that this is your session. You can ask anything you need. We are here to help. So feel free to stick on the chat any asset you want me to cover, anything you don't understand in regards to fundamentals and economic data, anything. So topic of the day, hot potato of the day, is the US GDP and the ECB. Of course, hello, Nweke, welcome. So guys, just very, very quickly, I will share the calendar with you before I share also the platform to see together, of course, the impact in the market. So we had out the GDP, the fourth quarter GDP. So this is a preliminary reading, 3.3%. So there is a nice growth below third quarter's growth. However, a nice bit of forecast indicating that the US economy is in a growth. That's a good thing. Jobless claims, however, they came higher than expected, which is not quite okay. That's the continued jobless claims. So jobless claims increase. Initial jobless claims beat expectations as well to the upside. So that's a lot of question marks. Whether these readings, the continuous jobless claims and the initial jobless claims, will add some kind of a pressure on the labor, on the NFP number, like next week, if I'm not mistaken. So this is what actually the Fed will want. However, that got us into a surprise many times. There were many times during the year, last year especially, that we had seen jobless claim increasing, indicating that that the labor market in the US is cooling off a bit, is weakening a bit, which is what the Fed needs in order to eventually start cutting rates. But that's definitely something that could add some pressure on the NFP soonish. So very good reading from GDP, nice growth in the US economy. The personal consumption, okay, that's not slowed down, but that's still a preliminary reading. So we have a deficit over here in the trade balance. Yeah, but the significant is the GDP and the jobless claim. So let me start sharing dollar index instead to see the impact in the markets. So, okay, guys, sorry for that. I will share my platform right now, just to see 30 minutes chart. Come on, Andrea, window tired. Okay, perfect. I think now you are able to see my screen as well. A quite busy one. Here we are. That's the 30 minutes chart in dollar index. We'll zoom a bit. Perfect. So what we have over here, we have a pretty a lot of indecision. An initial jump higher, as you can see. Initial jump higher. I'm gonna come to the questions in a bit. Hello everyone. Hello CM Pips. Haliru, Reke. Welcome. I'm glad that I can see familiar names. Hello everyone. Hello Edwin. Who goes? Welcome. Hello everyone. What are you buying? What are you selling? Give me signals. I can't. I'm not allowed to. I will try to explain the sentiment for any asset that you want me to, dear Thomas, but I cannot give you signals. I can explain, I can provide breakout levels, resistance levels, support levels, momentum, any indication that I can say, I will let you know, but I cannot provide signals. If you need signals, feel free to download our auto chartist tool. It's free, okay? It's free and it's a scanner. It's a market scanner providing signals. So, why do you have? Oh, David, you got me. Oh my God. Okay. Indices. Okay, guys, give me a bit. Okay, to cover dollar, since we had dollar announcement and euro dollar, and I'm gonna come back in a bit for the indices and Aussie as well. So I forgot to mention durable goods, but I will verbally mention them. Durable goods in growth as well in December. Good news for the U.S. economy, but that raised the questions whether inflation will remain on the upside. So whether it's something that could keep inflation, the U.S. inflation, higher for longer. So guys, as we can see, this is again repeating. This is the dollar index 30 minutes chart. I'm going to zoom in and you can see that there is a lot of indecision. Why? We have seen the final third quarter reading at 4.9%, so nearly 5% growth in the third quarter in the US. And we have seen the preliminary reading for the final quarter of 2023 at 3.2%, so another strong number. You can see my screen and everything, right? Yes, you can. Perfect. So what that's supposed to mean and why it caused this doji, not doji, actually it's not doji, but there's a bit of a decision, initially boosted up, breaching 103.25 level and then quickly turn back down below 103 because we have contradictory signals. From the one side, we have the growth, durable goods also beat expectations. From the other side, we had an increase in claims. Well, that's supposed to mean more unemployed people, which means that the labor market is slowing down a bit. So from the one hand, we have what the Fed wants, a slowdown in labor market. For the other side, however, the growth, the consistent growth, the durable goods is something that might indicate that inflation might be kept high, high in the US. Obviously, the key is tomorrow's personal consumption data. So for the time being, yeah, the market's reaction is definitely choppy. It's look like the market doesn't know where to go. That's why we've seen a bit of a dollar decline, but still holding some floor at the highs of 102 territory. I guess that equity futures are high, but let's quickly turn to NASDAQ. Here's NASDAQ. Yes, indeed, they are higher. Not dramatically higher, but higher. So, yeah, that's on the GDP. That's on the growth. That's on the strong growth data. That's why the US indices are moving higher. Let me just. Okay. Guys, I would like, if you can, to let me know which assets you want me to cover, and preferably if you have a preference on time frame, I mean particular time frames that you want me to cover, let me know, at least from the technical perspective. So let me check whether I'm missing anything. No. As yeah, let me scan a bit. Something similar. I'm getting back to dollar index. Actually, yeah, to dollar index. Just to remind you, yesterday we had this pretty strong PMIs as well. What that's supposed to mean? What the strong PMIs, the strong durables, the strong GDP number. This is something that trims even more the Fed rate cuts bets. Market was betting that soonish Fed will start rate cuts, but these data don't really support this scenario. These data push back the possibility of Fed rate cut anytime soon. So that's why we have seen the dollar being a bit indecisive. So yeah. So and weighted significantly. This has weighed significantly on treasuries. You can say to me, but Andrea, why we should see actually an indices, US indices at least, turning lower since the rate cuts are pushed back, they're trimmed, etc. We cannot see that because it's earnings season, and we have a very strong earnings season so far, especially from the tech sector, which is the main driver of NASDAQ, right? We had Netflix beating, Microsoft is coming, sorry. Chip makers, ASML posted a % increase. In general, all this money about AI, about chip making, all this demand, growing demand, supports for AI. I'm referring AI and chips as well, is what drives the tech sector. So it looks like the economic data have been a bit ignored, at least in the corporate sector, in the US equity sector. Check your questions. Yeah, so just to ask to reply to, sorry, to reply to ask about indices was Emmanuel. This is NASDAQ in 1 hour chart. Oh, you ask here. NASDAQ in 1 hour chart, okay? Someone asked for the indices. I'm pretty sure about them. Cannot find the comment right now. Okay, nonetheless. Okay, so as I said, we have a nice rebound. Let me just write down what I'm covering right now. This is NASDAQ, USA 100. Okay, USA 100. I'm going to post it so you can see it. I'm going to come to the gold in a bit, guys. So this is NASDAQ, okay? So nice round up, recovering nearly the half of yesterday's losses. The yesterday's losses came mainly from Tesla news, which actually had a dip up to 23% decline in their profits. So the asset, the NASDAQ managed to recover more than 50% of the losses yesterday. And please, guys, consider that we are just 40 minutes away from the US Open, which is expected to be a strong upwards session. Why is that? Because okay, other than the Tesla, which is expected to decline on the US on the market open, there is a lot of as I said, bullish momentum from other tech giants such as Microsoft. Microsoft, for the first time ever, it managed to be the second 3 trillion company. Okay, very, very positive news from the corporate sector in general, something that expected to boost the US stock market, the Wall Street market, as we're moving into the US Open, to the upside. Okay. Let me just so right now 17,000, can you see that? 17,700 is really, really close to the 61.8 Fibonacci level, which is a very strong retracement level. So you can understand that a break closure in 10 minutes, so at the top of this of the hour, in 10 minutes, if the asset managed to extend above 61.8, that could open the doors to another record high for NASDAQ. Okay, very, very strong, positive, bullish trend has been seen since October. It remains intact. We keep having record highs from the US indices. Despite the data, despite all this trimming of the Fed rate cuts that we are seeing, the earnings season is very, very good, very, very strong, something that boosts the stock indices to the upside. Even though this morning we're a bit muted, as you can see, that as we move on into the US Open, boom, up, plus the data, of course. But yeah, Tesla is the one that is expected to sink significantly, but is one out of 100 components in NASDAQ, one out of 100 components of 500 components in S&P 500. So overall, US indices remain on the upside. So I will check Dow as well, since Lindelani is crying about it. What happened there? What have you done? What I guess you took a position or something. I don't know what happened over here. Why you're crying? In general, look at that. Okay, the Dow. To be honest, it was the one that benefit the least. So it was a bit choppy this week, sideways, failing to extend and to breach again the high of the week. Slow down a bit, but the outlook hasn't changed. The overall outlook hasn't changed. It's still at, look at that, zoom out a bit. Okay, so I'll zoom out a bit just for you to see that it still holds at multi-years highs, actually at record highs. So the 2021 high was rich and broken in December, and the asset managed to hold gains since then, to hold gains, not posting new fresh record highs like NASDAQ and S&P 500, but very, very positive as well. So yeah, the why NASDAQ? Okay, since I'm guessing that you had a position open or something. So I will explain a bit what you should take care regarding Dow. Okay, Dow is a US index that it contains 30 companies. However, it's not a tech heavy index one. What I mean, it doesn't have a lot of tech companies in. Okay, it's more of a health companies. So some components of Dow is United Health. Okay, which actually, if I'm not mistaken, it lost this today. It's 3%. Yeah. I can see it right now. That is 3% down. 3% down for the day. So that's why we have seen in general Dow Jones to the downside so far today, even though the data boosted and helped it a bit, recovering some losses and to move back to 38,000 territory. But there is a strong ceiling for Dow Jones over here. So Dow Jones it contains 3Ms. Okay, 3Ms was very positive actually in January. It was on the upside. It contains American Express, Chevron, Boeing. Boeing also, if I remember properly, is under pressure because the FAA banned, actually restricted the Boeing 737 MAX protection. I think it was a banned. That's why also, so the major components of Dow Jones are under pressure today due to this news, and that might explain why it was on the on a pullback earlier. This is the 1 hour chart, okay? But as I said, tried to recover. It went back up. However, the technicals are not really suggest a reversal or a boost to the upside, my dear friend, for Dow right now. Dow remains ranging for the week. Okay, so let me put the 4 hour chart so you can see that it's ranging for the week. Key level is the 38,000, actually 38,100 to be more precise. So but it's more of a choppy one and more of a sideways one. So retested the bottom of the week, quickly recovered, but still at the mid of the range. So if I'm not mistaken, the mid of the range is here. Yeah, still off. Oops. Okay, you see that is still halfway for retesting the top of the week, the high of the week. You need to see the asset returning and breaking this latest up fractal, more precisely the 38,100 in the near term. So that's enough for Dow, and I should move on. But having in mind that overall is positive to neutral. Intraday is sideways. Okay. Should change the color of the background. You're struggling with the black, I guess. I'm gonna try. Is this better? Okay, gold. A lot of people are asking for gold. Okay, a lot of people are asking for gold. So hopefully this is better for you guys. If not, let me know, okay? Gold. Okay, let's change to gold. I know that everyone is interested in gold, and that's quite understandable. I'm gonna change it to white. Don't worry about it. Just give me a second. Okay, perfect. Okay, so guys, gold had been a bit it's ranging a bit. Okay, this is the daily chart. Just gold. Okay, can the unemployment rate claim? Okay, can the unemployment rate claim going to have an effect on US dollar in the long run? Not particularly, no, because we had, sorry, let me change that to white as well. Very good question from Uncle Mose. So if there was a day that we didn't had any significant news and it was only the jobless claims and etc., we could say yes. But since we have GDP, we have ECB as well, that we haven't discussed anything about it yet, but we should. Yeah, it's unlikely the dollar to be driven only by US unemployment rate, considering that we have seen a significant strong PMI's data yesterday, strong GDP number, which is basically showing the growth of the US economy, and pretty strong durable goods. Okay, so if just a scenario, my dear Uncle Moose, if the market was solely focused on unemployment, and unemployment was the unemployment claims, to be precise, if the market was solely focused on unemployment claims, considering that the unemployment claims grow, okay, that should have a negative impact in dollar. Why? Because it indicates a slowdown in the labor market, which indicates that the Fed could proceed with the rate cuts. So we'll increase the bets for a rate cut soon. But that's not the case. We have mixed signs. We have slowdown in labor market based on the unemployment rates, but we still have a very solid, nice, strong US growth, durable goods, and so on and so forth. So yeah, that's why we have seen all these indecision, guys. Wait before the market to calm down a bit. Put your key levels, your support and resistance level, your trigger points. You see, that latest low could be your immediate support level, and this double top, so here and here, could be your the top of your immediate resistance, just to check and monitor whether the asset, whether dollar will manage to break either the bottom or the top of the range. Because right now, based on these contradictory signals that we are getting from the data, we don't know what to do. It's sideways. There is a lot of indecision. Okay, there is a lot of indecision for sure. Greetings from Ghana. Welcome. Glad to see you. Okay, let's bring back gold then. And I'm really sorry for everyone that was asking about gold. Welcome. First time here with your brother. Welcome. Hopefully you enjoyed. Anything you need, I'm here to reply and explain as much as I can. So, gold. Okay. As I was about to say, guys, this is the daily chart, okay? Just to start, this is the daily chart. Why I start with it is just because I wanted to show you that in the medium term, like daily chart, it's a bit choppy. It's ranging. So if I just draw a box, you can see that for 7 days in a row, it's moving sideways. And if you notice, it's moving sideways on my 50-day moving average. So it's ranging. And I don't know how many of you have read that's the Forex trading hours. That should be out of the way. Yeah. And as I mentioned in my article this morning, the thing with why gold is ranging is because we have a weak dollar from the one side, okay, but on the other side, the Fed will meet next week. So this uncertainty, this anticipation of the Fed next week is something that adds to this sideways movement for gold, this indecision, because market have as I said earlier, in expectations for early rate cuts in US, in Europe, in Bank of Japan. Don't forget that we had Bank of Japan earlier this week with Mr. Ueda hinting, signaling that the exit from the negative rates environment is coming into view. So, a hawkish stance from Bank of Japan, uncertainty from the Fed next week. We have ECB today, plus we have a pretty up and down, pretty sideways dollar. Sorry. So that's why we see that this we have some catalysts that are keeping a ceiling for gold, some catalysts that are supporting the gold. So it's moving, it's ranging for now. Everything will get clearer as soon as the Fed meeting is out of the way. So this is next week. So hopefully next week, once the Fed has its meeting, publish their statements, the gold could settle either to the upside or to the downside. Right now is sideways, even though for the 24 is overall the long-term outlook is that gold will be positive, because you have, it has an inverse correlation with inflation, an inverse correlation with rate cuts. So rate cuts positively, they have a positive impact on gold. For the time being, is ranging. You should keep an eye. It's the regression channel satisfies very, very, very well the gold. Okay, in the daily chart. This is a daily chart. As you can see, it then tested the bottom of the trend line of the channel. Let me just zoom in so you can see it. Come on. So it retested it last week. Actually, 1, 2, 3. This is the fourth day that this support level has been retested. As long as gold remains within this up channel and it doesn't move below the regression channel, which that implies to the 2005 is what I saw earlier, but that's okay as well. So 2000 and 2005, these areas will, as long as we don't see the gold extending below that level, the asset expected to remain sideways, while a move above 2038, just be precise, Andrea, right here, could indicate the reversal, the rebound up to 2100s. Okay, actually, let me be precise, should be somewhere halfway. Let me measure it. It should be, oops. Okay, here we are. So key support, if it breaks, it could breach, it could open the doors to 200 territory, 200 exponential moving average, and the 1960 level. However, if it holds within the channel, and as long as we have a confirmation about the rebound, so that means we will see the gold extending above 2040 level, then we could see gold returning to the highs that we have seen in December and November. So that implies to 2075 or even higher, up to 2140 territory. So can I draw it? How can I draw it? So something like, so here, okay. Sorry, I'm not good at drawing, but I'm trying. Consolidating a bit, if that means consolidating. Oh God, I'm so bad at drawing. Before another attempt to the upside. Okay, I think you get what I'm trying to draw over here. At least trying. Okay, so this is daily. So let's get down to the 1 hour chart, wide one. So 1 hour chart for gold. 1 hour here's the 1 hour chart. I'm gonna get rid of, I'm gonna change also, I need this one to be the 5 exponential one. I need the fast environment, and I need the 9 as well. Let's make it in green, not yellow. Here, exponential. So what we have over here, sideways, choppy, up, down, up, bullish momentum, bullish cross actually from my fast moving average, MACD negative momentum decline, that's a good thing. We have a bullish cross from stochastics, RSI at 54. So there is a near-term positive bias for gold. So if I zoom into the 30 minutes chart, yes. So in the very, very short time frame, my dear friends, 30 minutes, 1 hour, we can see that the bulls are gaining some ground, okay? They are gaining some ground with the next resistance level to be at the, I love Fibonacci's, you know that. If you follow us years now, since I'm here for seven years plus. So yeah, the next resistance level stands at 2024. 2024, nice 3 consecutive 30 minutes candles, bullish cross on stochastics. MACD, it's at neutral, RSI at 61. So there is still some bullish momentum. So key resistance level stands at 2024. Okay. This, if I'm not mistaken, should be the mid of this decline. Let's see. Oh, yeah, indeed. Slightly above the 50% retracement level. So if indeed the asset breached that level, it would be very interesting to see if it will manage to extend above it. Because if it extends above it, then 2030 will be the very next resistance level. On the flip side, support is at these consecutive bottoms over here, which is coinciding with the 5 exponential moving average over here. So there's the 2017 territory. You could so that's the immediate support, resistance, boom, bullish momentum based on RSI and stochastic. So there is still, you see that stochastic are pointing higher. That indicates there is still some room to the upside. There is some bulls pushing gold. This is the 1 hour chart, 30 minutes chart, 30 minutes chart. Daily and 30 minutes, okay? Is this live every Thursday? No, it's every week. We're trying to do a live every week, dear Galaxy, but it's based on the news. So we will try with my colleagues to have another one tomorrow, because tomorrow is a PCE, is a personal consumption from US, which is very, very important because it's the Fed favor reading, right? So we're going to try to have another one tomorrow, but usually is every week based on the news. So if we have a key event on Wednesday, we're trying to do it on Wednesday. If there's a key event on Thursday. If there's a key event on Friday, like the NFP, then Friday. So it depends on the calendar. If you subscribe, I mean, if you follow our YouTube channel or Facebook or Twitter, you're going to get an alert every time we go live. So don't worry about it. Just subscribe in order to get an alert. Dear, we could help you as much as we can, but you need to start joining our webinars in order to learn the basics first. There is plenty of material in the website for free, recorded webinars, also written material. Please try to check the past webinar page, or check YouTube. There is a playlist, webinars for beginners. Start to read a bit, to watch some videos, at least to start getting a bit more familiar with the terms, with the basics, and join us. Oh, already bridge, guys. Already bridge. Nice. Boom. Let's see. So I was saying, Prosper, try in your free time to watch some webinars. Also, join us every Tuesday and Wednesday. We have a live webinar, and this will be a nice start for you to understand the terms, understand the basics, start a bit in a demo account to get familiar with the platform, to identify your own system, your own plan before you go live, and etc. But yes, please check either the YouTube channel, the playlist called Webinars for Beginners, or visit our webinar page, register to the upcoming webinars, and we will try to help. Zimbabwe, Amathru, welcome. What's the Signal app? Please, auto chart this. Let me share it with you guys. Let me share it with you. I don't know, many of you might, I don't know why you're not aware that we offer this tool for free. But yes, it is for free. So if you have an account with us, and you have our platforms, download it. It's a Signal tool. It's a market scanner giving you signals based on the technical analysis. It's very, very useful as well. Dollar yen, of course, dollar yen. Dollar yen. Dollar yen. Let's put dollar yen was very, very interesting. Very interesting cross for the whole week, actually since last week. So this is the 30-minute chart, plummeting down, breaking 174 level. It's a level, I don't know whether you are on our Telegram, you're following our Telegram, but okay, let me start with the daily chart just to find my immediate support and resistance levels. 174 round number. Okay, 148, the other one that I want, another round number, and the top, which is at 148.70. Okay, perfect. Now, sideways, this is the daily chart. Sideways, boom, yesterday extended below 148, okay, and remains on the back foot so far today. So let's zoom in and check the 1 hour chart as well to see what's going on over here with dollar yen. Sorry, just a second. I think someone else also asked about dollar yen. Who was it? So, who asked about yen? Okay, cannot find who else asked about dollar yen, but don't forget that we had Bank of Japan Bank of Japan. So basically, what's going on over here is that yen gains significant gains. Actually, it's getting stronger against dollar, which this comes in contrast with the sideways movement that we see in the dollar. Okay, so why is that? Is the uncertainty. When people are feeling cautious about the markets, they're not feeling sure, there's not a clear direction, whether we have contrast signals from the economic data. This is what happens. The safe havens gain some ground. Don't forget that dollar yen is um, a safe haven, right? But also consider the hawkish tone from Mr. Weda the whole week, actually. Yeah, it was the whole week. Uh, when he indicated that, sorry for that, just when he indicated that there will be an exit of the negative interest rate environment soon. So this hawkiness from Weda, and on the flip side, the uncertainty around the dollar and around and ahead of this anticipation ahead of the Fed next week is what is responsible for this near-term strength that we are seeing in yen against the dollar. Right? That's why dollar again is on the downside. Still, the 147 level, the one that I have in black over here, is still a very important support level. It's a round number. It's a support that has been seen for nearly 2 weeks now. Is it? Yeah, I think so. It was the last, since last Monday. Yeah, it's nearly 2 weeks support, round number. So we need to monitor whether there will be a breakout of that level, or whether this will remain the strong support that it has been for the last 2 weeks. So from technical perspective, there is not an indication that this sell-off will continue. Why I'm stating something like that? Reminding, dollar yen 1 hour chart. This is what we are looking. Indeed, we have a sell-off, but this is a very strong support level, a round number, and the momentum, it looks that is a bit weak. So the lack of momentum suggests that this decline might be limited. So we might see dollar yen to pause a bit this decline, and to find some support before another attempt to the upside, similar with what happened last night, what happened on Monday night, and so on and so forth. So there is not a strong momentum. Actually, there is a lack of momentum. So this swing lower looks that it's already fading. Yeah, looks like it's already fading. So let me double check, but yeah, is what I said. There is a pressure because we have at the back of our heads the hawkish still from weather, but on that other side is a dollar cross. So the data and the fact that next week we're gonna have Fed is providing some kind of a support to this asset. So try to focus on the technicals for this one, okay? Try to focus on the technicals. Try to check whether 147 will be broken anytime soon. If it's not broken, And if you see any reversal of the upside, returning back above the 147.50 level, that will indicate another retest of the high of the 2 days highs and the 147.80 territory, or even higher. Depends which time frame you are. So we're just gonna put my Fibonacci's on the leg that we have seen this week on this down leg. So the mid of this down leg is the 147.66. So another resistance area to be closely monitored. Yeah, and let me just. So that's nice. That's nice. Look at that. Okay, I'm gonna delete the previous Fibonacci just to show you something. That's the Fibonacci from this. This is the 1 hour chart, dollar yen, right? Okay. So we have a rebound. We have seen a rebound. Actually, early in the morning. The close of the US Open and the open of the Asia Open. So we had a nice rebound with the asset breaching 147.90 and then turning down. Look at that. This decline retested the 61.8 Fibonacci level, which is a very strong retracement level. So that's why that supports what we mentioned earlier, that there is a lack of momentum, that this decline looks a bit limited. So over here, we could see the rebound of dollar yen with the next resistance at 147.65 and the very next one, if indeed it corrects and push back higher to breach the 148 level. Keep an eye on it. Very, very nice short-term asset to have on your monitor list. What else? Welcome, Desmond. Welcome, Shola. Zipa, gold. Oh, pound, of course. Pound. Guys, I need to double check what's going on with Miss Lagarde as well. We haven't seen anything about it. Let me check. Lagarde, she started here QA 25 minutes ago. Okay, I'm gonna come back to it in a bit. But let's check first of all the undial question regarding regarding pound. So where are the rest of the questions? That's weird. I lost your questions. Okay. Nonetheless. Pound. Cable. This cable. So 30 minutes chart, some ups and downs. Now that we have Miss Lagarde on her toes. So sideways, yeah. Cable is a bit choppy. It's a bit choppy the whole December and January, actually. Yeah, extremely choppy. Let's see. Okay. So what we have over here? Sideways. There is just a second, guys. Yeah, for Bank of England. Regarding Bank of England, still we're expecting an unchanged policy in the next meeting. We don't expect to change anything for the time being. However, cable remains has been to the sideways for 2 months now. Look at that. Okay, here. Sorry. Here. So since the mid of December has been to the sideways, bouncing between the should be precise between 126 level 126.10 and 127.95, so bouncing up and down within these barriers. So so far today, here we are. You can see that. Oh, that looks awful. Let me delete that rectangle. Okay, let's move on to the 1 hour chart. You can see that the borders squeeze a bit, indicating the lack of momentum, but you can still use the top of the wages and the bottom over here as some short-term support and resistance level, at least a very, very short one, 30 minutes chart, and etc. Not very promising, because the Bollingers, they're very narrow, flat, and actually not narrow widened but flat, confirming the consolidation. Moving averages, let me put my short-term ones, the 5 exponential and the 9 exponential. You see they clash. There is not a clear neither bullish or bearish signal. They clash. There is some pressure. So dollar is gaining some ground. That's why we've seen some pressure. But okay, obviously the 127.17 is an immediate support level. So if we see that moving below that, then you have the day's bottom as the very next support level, down to 127 round number. So it has already broken it. Look at that. So the next support in the very, very, very short term is the 127 level. But in the very, very short term, because overall, this is the 30 minutes chart in cable. Because overall is sideways. So yeah, down, moving below all moving average in this 30 minutes chart, broken my immediate support. So the very next one is 127 level. So where's the questions? Pound yen when there's a dollar news. Nice questions today. Nice questions. Thank you, Uncle Mose. Pound yen is the most volatile asset that there is in the market. By the way, the most volatile asset that there is. So, okay, we need Y template. Okay, perfect. And I would like to start with the daily. Okay, bear with me, Uncle Moose. The reason why I want to show you a daily one first is because I want to show you the rising bullish momentum, right? ignore stochastics for now, is for the short term. The rising, here we are, RSI, right? So positive signal. And look at this beauty over here. 50, 20 cross above 50. That suggests positive bias in the medium term, okay? So, indeed, this rally looks a bit overstretched. So, it had been to the upside since, I don't know, since the 3rd of January. Since the beginning of January, it has been to the upside. There is over here some choppy sideways movement. This looks to be just a correction before another attempt to the upside. Why? Because it had been to a strong, nice rally, overbought for 25 days now. So this sideways movement, it looks to be a correction before another attempt to the upside. This is what it looks like. So you need to keep an eye on the peak, so 188.50 level, and on the, I will revert actually, and on the 186 or even 187 level. Just 187 is here. Yeah, you should closely monitor this area over here. Only a break, a move down to, basically a move below 187 could open the doors to 186, but that would be a near-term bearish bias. In the medium term, if it comes down here and moves below that, if it breaks that level, then we might have the confirmation of a reversal of the so far uptrend. So a break of 186 level could open the doors to 182, 181, 180. It will mean the reversal of the upward trend. However, both technicals and fundamentals support the bullish bias for pound yen. It is in a correction right now. So what that means, it means sideways movement before another attempt to the upside. So the odds are on the upside, but as soon as we have a confirmed move above the latest high, which is the 188.90 or 190 level if you prefer, that could open the doors to 190.70, 191, which is the 123 Fibonacci level, and so on and so forth. Because momentum is positive based on MACD, RSI keeps rising. There is a bullish cross between 20 and 50 exponential moving average. A stronger yen than pound, and so on and so forth. Okay, how the pound yen react on that is a dollar news. Usually, I'm not quite sure if there is a strong correlation right now between the two, but yen, as I said, is a safe haven. So usually they have an inverse correlation. But let's check. That's a very nice question. Do I have correlation metrics? Yes, we do have correlation metrics over here. Let's see whether it will. So you mentioned pound yen, my dear. Pound yen and dollar. Add to the trading list. We need pound yen. You know what? I'm gonna have, where's pound yen? Close. Let me just pound yen. GBP, JPY, to do at save. Where is it? So, and I want dollar index as well. At this one as well. Save, close. So where we are. So dollar index, pound yen. Oh, you can't see it. Oh God. Let me share the entire screen. Now you can see there's a correlation matrix. So my dear friend, Uncle Mose, there is an 84% positive correlation between pound yen and dollar index. So that means that they move a line in the 1 hour chart. So dollar down, pound yen down, dollar up, pound dollar up. So there's a positive correlation. Can you see that? Positive correlation. Sorry. Yes, positive correlation. Yes. So let's double check. So 1 hour chart. Sorry. Bam, bam. Down. This is the pound yen in 1 hour chart. Down. By the way, it's ready to break my 87 territory. And let's check dollar now, which is, double check what's going on over here. Have I missed something? Let me double check. So it says that there is a positive correlation based on the data, but it looks like the last 30 minutes, they are negatively configured. So, okay. Let me just, you need to amend it in order to get appropriate results based obviously on what you need, unless if it's my setup over here, it's my setup's fault over here. So there is no correlation at all right now. It was my bad, dear Uncle Mos. I should have changed the settings just to double check whether there is a correlation or not. No, for the time being, there is no correlation. In general, theoretically, there is one. But it seems that today, in the short term, the last few hours, there is a lack of correlation between the two. There is no correlation because pound yen is on the downside, while dollar is a bit steady to positive, failing to break above 103.20. So there is no correlation for the time being. That doesn't mean that there is not one, okay? Theoretically, they have sorry, I lost. I have a bit of I got a bit tired. So come on. I'm gonna delete that, close that. Yes. Okay, perfect. So theoretically, there is positive correlation, but right now in the 30 minutes and 1 hour chart, there is no correlation. But if I just zoom out to give you the overall look, you're gonna see that in the daily chart, dollar was to the upside the whole December and January. Pound yen was to the upside as well since December. So theoretically and usually they are positively correlated. Right now, though, if I focus to the 30 and 1 hour chart, you can see that there is no correlation. Okay, so always double check. That's nice. That's nice with pound yen down, broken the 107 level. No, actually, it's ready to break the 107 level. Extended below Bollingers. This is the 1 hour chart pound yen extended below Bollingers, broken the 200 exponential moving average and ready to retest the 187, which is the round number and a very key support level, as I explained earlier, right? But still, that's in the near term. And move below 187 could open the doors to this gap. Let me show you something. A break of 187 could could fill this gap over here, but it doesn't change the positive overall outlook for pound yen. In order to believe that there will be a reversal of this trend, we need a move below 186 level. Okay, so overall it remains positive. Intraday is negative with with imminent support at 187. And as soon as this breaks, the doors are open for completing and filling up this gap. So 186.65, 186.20, if and only if 187 level breaks. Guys, I need to call it a day, I think. Don't, there are some strong correlations, but it doesn't mean that you should blindly follow them. You need to double check that for your time frame. They are indeed, for your time frame right now, they still have a strong correlation. And then you can decide to either hedge your positions or add to your positions and so on and so forth. Why I ask the questions when gold is going up, pound yen used to down. So okay, let's check that a bit. So I will put the daily chart. You mentioned pound yen and gold. Pound yen and gold. Nah, weak correlation. Weak correlation, I'm afraid. Yeah. Right. I mean, this particular month, I mean, there is a little weak correlation. If I zoom in to the 30 minutes chart, no, I'm afraid there's a lack of correlation. Okay. Theoretically, once again, the gold has a positive correlation with cable, but I think that is no longer true. Okay. So guys, I'm gonna call it a day. I think I haven't missed any question. If I did, let me know. If there's anything that you want me to cover, let me know. Anyway, keep asking about gold, but don't worry about it, because as soon as I close the session, there will be the live stays in YouTube, stays in Facebook, stays in Twitter, so you can drag and drop and see my analysis on gold. Gold, as I said, it remains in a ranging market. Very important is to see whether it will be held in this upwards channel, and if it rebounds away from 2000 territory, and more precisely the 2040, we could open the doors further to the upside again. However, for the time being, is sideways, ranging, okay? Ranging between 2005 and 2035 levels. So there is a bit of a rebound, a weak one intraday with negative momentum. So that is running out of steam. This tiny rebound, it looks that it's running out of steam. So based on the momentum indicators over here, you see negative MACD, quite a weak slope in stochastic, flat RSI. This suggests, and the body of the candle suggests that this move is running out of steam. So we might see a pullback. So What about it? Chat, you are referring to gold? Up. Doji failed to break the 200 territory. As I said, momentum, there is a lack of momentum, so this upwards movement is lacks out of steam. So keep an eye to see whether it will turn back below the 2018 level, because if it comes down here again, then we could see reverting to 2010 level. Okay, that's pretty much it. I'm gonna call it a day. It's been quite a lengthy live. Actually, sorry, allow me just very quickly to check together the euro dollar, because Miss Lagarde is speaking right now, and that is also something that adds to the pressure on this euro dollar, because it seems that euro is gaining some ground against euro. What she's saying, basically, possible rate cuts in summer. They remain data dependent, not day dependent. They're watching costs, shipping costs. What else? Wages are declining, she's saying. PMI says more signal of stabilization, as she's mentioned earlier. She said that they are seeing some very encouraging numbers. So that's a pretty, not quite dovish. Actually, it is a dovish statement, because she made it clear that rate cuts in the summer, it might be a fact, maybe certain. Not quite sure whether it's a dovish one, but for sure the euro is well supported against dollar over here. Well supported, but that looks to be more of a dollar, of a euro weakness rather than dollar strength. Yes, this is it, guys. This is it. This is a euro weakness and not a dollar strength, because she confirmed that they are data dependent. They need to see more in the economic data, but she feels confident enough that we're gonna see rate cuts in summer. And right now the money markets are pricing 140 points in cuts this year. Before the statement was 130 points of cut. Quite dovish statement. That's why we have seen euro weakening against dollar. Okay, very key. Broken, actually, the support of the day. Let's zoom out. Extended lower. Actually, the doors are widely open for the 108 bottom. So that means the next support levels are at over here, 108.45 and 108.32. The next two support levels for euro dollar. So euro weak against dollar due to the dovish tone from Ms. Lagarde. Very interesting. Guys, I'm gonna call it a date. Thank you very much for attending. Hopefully, I helped you with my comments. Feedback is more than welcome. Take care. Tomorrow we have the US PCE. And a lot of corporate earnings are on the agenda. So Keep an eye on the news, keep an eye on the politics as well. Geopolitics are driving oil and enduring the commodity sector, so keep an eye on that as well. Take care, and I'll see you again tomorrow. Bye-bye.